Welcome back, and yes, the Bitcoin vertical acceleration is off the table for now with one of the largest Bitcoin companies in the world, Bitfinex, which is closely tied to Tether as well. They believe that the Bitcoin cycle for now is over, and in my view, this is very in line with what I have been predicting for months at this point, that we are and have been reaching the top of the Bitcoin market, and we are rotating now into DeFi and Wall Street. Big money, billionaires, companies, corporations, they are all interested in DeFi. And so in today's video, we're going to be exploring why the Bitcoin cycle may be coming to its end and where the money is going to flow. Because as we talk about on a regular basis, when the money drains from one crypto asset, it doesn't just disappear. It moves into other assets, whether that's other cryptos, stable coins, stocks, real estate, or any other type of investment. We're going to be discussing that in today's video. We're going to be starting right here. And by the way, this is the Cryptoviser podcast. We talk about everything crypto, blockchain, and investing every single day of the year. Today, we're doing a macro view of where the markets are now that we're in the second half of 2025. But sometimes we actually do deep dives into individual cryptocurrency projects or ecosystems of investments, a little bit more in depth than we're going to be going through today, which is more of the general view and where the money is flowing to. If you want to see other videos of deep dives into the individual cryptos, definitely take a look at my channel. And we're going to be talking about individual cryptos in today's video, but it's not going to be the full deep dive that we do with other videos on this channel. So make sure you guys are subscribed, give the video a thumbs up, and let's get right into today's video. Now, as I've been discussing on my channel for months now, I mean, all the indicators are showing us that the Bitcoin market is topping out. And while there's still a large part of the market that says, but Cryptoviser, what about retail? Retail hasn't even joined the party. It's like, where have you been? We're going to get to that in just a minute, but Bitcoin vertical acceleration is off the table for now, according to Bitfinex's own analysts. They said for the first time in that uptrend, basically talking about the Bitcoin buying pressure weakening, as more traders are starting to take profits in Bitcoin specifically, momentum has begun to fade. According to the analysts, they warned that order flow data and on-chain metrics signal that Bitcoin may be entering a period of consolidation or reaching a local top rather than a continued vertical acceleration. Spot volume has cooled, taker buy pressure has weakened, and profit taking has intensified. Well. Guys, this is from the data on chain. I've been getting a lot of hate, a lot of people unsubscribing from my videos because I'm not a bear in the market, but at this current moment in where we are in the cycle, yeah, I am a little bit bearish. You can see we talk about whales are selling right here. Trump sold the top. The $50,000 drop will happen. These are things that we've been talking about on these videos. The fear and greed index warning. The market is crashing, I told you, right? Selling everything. The market is fake. We have been talking about this for months on this channel. And a lot of people are ignoring all the signals that the market is telling us of where the cycle is. Like, can we go to 200,000 or 300 or 400 or $500,000? Of course we can. But is that the likelihood of what is going on? Well, based on the data that I'm seeing, the answer is no. The data that Bitfinex is seeing, the answer is no as well. And by the way, public companies, right? These treasury thesis companies like MicroStrategy, Similar Scientific, 21, etc., they bought more Bitcoin than the ETF did for the third quarter in a row. And so when people say, but Cryptoviser, what about retail? The ETFs are retail. Like the ETFs are that. And it's surprising that a lot of people don't see that, but ETFs are the demand from retail. And these treasury companies that everybody's so focused on, they just don't seem to understand that they're buying the whole market and they're the ones keeping the market propped up. So they have to continue to buy hundreds of billions of dollars every single year of Bitcoin. Otherwise, the whole thesis collapses. Bitcoin companies grew their Bitcoin balance by about 18% according to data provided by Bitcoin treasuries, while ETFs showed only an 8% increase in that same period. And so, yeah, like retail has already joined the party, but they're not the ones pushing the massive demand in the Bitcoin price. And meanwhile, in the MicroStrategy world, right, Altcoin Daily reported that Michael Saylor's Bitcoin company strategy has officially qualified for consideration for the S&P 500 in September. And this is what everybody was waiting for. This was the next big signal, right? Was MicroStrategy going to end the second quarter, the end of June, in the positive? Because if they did, that would be a certain number of months or a certain number of quarters in in the positive territory. But the MicroStrategy bulls, they were just saying, but Cryptoviser, but Jim Chanos, they're going to be included in the S&P 500. No, they would be qualified to be included in the S&P 500. Jim Chanos sarcastically responded, said, I was reliably informed by the faithful, aka the MicroStrategy maximalists, that this would happen yesterday at the beginning of July, but I guess this will now be news in the third quarter. It's not going to be news. It's just another announcement of an announcement of an announcement of an announcement, drawing out this whole MicroStrategy play. Like, just because they're going to get included in the S&P 500, that this is a big deal. This goes right into the whole ETF situation with cryptos. A lot of these altcoins that have already pumped substantially, a lot of that was the market pricing in all of the positive sentiment for these cryptos. For example, XRP. When the Ripple lawsuit with the SEC kind of resolved, or looks like it was going to be resolved, the market started pricing in getting an ETF, getting more institutional play for XRP. And so it's already priced in. Solana ETF already priced in. We were at $8 at the cycle low. And so the idea that these ETFs are going to pump the market as well, it's a failed thesis, because who is Wall Street going to be buying the crypto from with XRP? Who are they buying the crypto from? Ripple, not from you, not from the open market. With Solana, who are they buying the Solana from? The billionaires who got it in at 25 cents. And so this is not going to drive the market either, even though a lot of people say it's going to. And by the way, we're getting to where the cycle is going to be turning to, because just because the Bitcoin price may go down, well, there's a lot of other bullish momentum in the market that we're going to be talking about. But before we go there, I want to show you other signals. And we've talked about this before with the whole Bitcoin strategic reserve, and states are going to have their own Bitcoin reserves. Well, Connecticut governor just signed a law blocking the state of Connecticut from establishing a Bitcoin or crypto reserves. The measure passed through the state legislature before reaching the governor's desk for final approval. So just as we're seeing some states saying that they're going to look into Bitcoin or crypto reserves, other states are going the other direction and saying, no, we're going to even put it on the books that it's not allowed. And this is also kind of end of cycle signals, because everybody was over the last year and a half, everybody was kind of pricing in that we were going to see strategic Bitcoin reserves and that all the states were going to do it, and then we're going to see a national one as well. And this is just not playing out, at least not the way that we were told or many people expected. And so this creates the situation that we are in, where Bitcoin can barely hold on to $105,000, $106,000, $107,000, $8,000. And the market keeps saying, well, we're the most bullish we've ever been, even though we are literally at all-time record highs. But then we hear things like this: Deutsche Bank to launch Bitcoin and crypto custody services in Germany. Germany's largest bank plans to offer these services in 2026 as institutional adoption accelerates. But the thing is, like, this was already priced in the market, because banks have already been, approving crypto in the United States and around the world. And so things like this, they're little like signs, but we've already heard this before. We've already heard about banks launching crypto services. So this is not the first to market. This is not the second to market. It's not even the third to market. And so these news cycles, the narratives that we see in the crypto, a lot of people, when they get caught up in the narratives and they get caught up in the bull run, they lose sight that the same narratives are playing out over and over and over. And I mean, how many different crypto Bitcoin treasury companies are you going to be bullish for? Like, if 15 other companies come out and say they're going to start buying Bitcoin with debt, you're going to be excited and bullish about that? In my view, it just creates more and more and more and more risk. I mean, we just talked about Anthony Pompliano's company that he's starting and raising Bitcoin, raising money to buy Bitcoin as a Bitcoin treasury company, but we're literally at all-time record highs. Like, raise the money and wait for the pullback. Don't buy all the way at the top. There's no rush. And the fact that we're seeing this rush continuing, and like, wow, the 19th different company that's going to be buying Bitcoin for their balance sheet. This is the most bullish I've ever been. It's like, wait, we have 20 companies buying Bitcoin and the Bitcoin price is barely moving. Like, how can you really be that bullish? Longer term, I am bullish, but for this cycle, they are the exit liquidity, right? The money coming in is the exit liquidity for people who want to get out. And when they do get out of the market, guess what they're going to do? They're going to move their money into other areas of the market. And that brings us to the DeFi conversation, because this is where the narrative is shifting. This is where we're seeing the shift from Bitcoin into DeFi. And this recent news kind of sparked this, I don't know, for me, kind of confirmation that we are now in the DeFi cycle. Pakistan will deploy Bitcoin reserves in DeFi for yield, according to one of their executives. Pakistan's crypto czar told Cointelegraph's magazine about being inspired by Michael Saylor and investing the country's Bitcoin reserves in DeFi. Very interesting. So this is a pretty long article. We're not going to get through all of it in today's video. But basically, this is interesting that they're going to be utilizing the Bitcoin in DeFi, which, number one, shows that there's clearly interest in utilizing decentralized finance. There's also interest in merging Bitcoin into DeFi, because Bitcoin doesn't really have a very large DeFi ecosystem. But where is this, like, where in the market is this really going to benefit? Forget about just Pakistan getting involved in this, but DeFi in general. Well, guys, it all comes back to Ethereum. And so now we're starting to see the Ethereum ecosystem starting to pick up, and we haven't really seen this the entire cycle. We've seen Ethereum kind of launching things, and they just did an upgrade earlier in the year and all of that. But a lot of their layer twos, or I call them Ethereum adjacent chains like Avalanche and Arbitrum and things like that, we haven't really seen a lot of focus on these cryptos in this cycle, pretty much at all. I mean, even though most of these cryptos did move much higher back from 2023 into 2024 before most people thought the bull run began, but that was the beginning of the bull run. We haven't seen since that time much conversation from big money, from Wall Street or anything, into Ethereum or any of the DeFi ecosystems. And I think this is why we've seen such vast value destruction in a lot of these coins. A lot of these coins are, I mean, if we're about to talk about Polygon, and Polygon is the premier layer 2 on Ethereum. And if you just look at the Polygon price, I mean, significant value destruction over the last year and a half. I mean, you could see just in the 1 year, we went from 70 cents down to under 20 cents. And if we go even further back than that, you can see in 2024, we hit $1.30, and now we're at 20 cents, which is, 1/5 of the price or 1/6 of the price, something like that. So there was a lot of value destruction in a lot of cryptos outside of Bitcoin and Ethereum. But now that we're starting to see the shift, we're starting to see companies getting more interested in Ethereum. We just covered Tom Lee is starting a company or merging with a company that's going to be buying a lot of Bitcoin, a lot of Ethereum. We heard about Bit Digital, which is a Bitcoin mining company that has now switched to a full Ethereum treasury strategy and staking strategy. And because the SEC and the regulatory bodies are becoming more open, and it seems like going to approve Ethereum staking and all these staking mechanisms in the ETFs, this is going to create a lot of money, in my view, flowing out of non-yielding assets like Bitcoin and moving into yielding assets like Ethereum and Ethereum adjacent products like layer 2s, like Avalanche and Arbitrum and things like that. And the reason that I'm saying this is because it's based on the data, right? I mean, these Bitcoin treasury companies, they really offer nothing besides buying Bitcoin, right? There's no yield, there's no dividend, there's no actual benefit besides the price potentially going up, but then they're going to sell more of their shares on the open market to keep the price suppressed. And that could become a huge issue, especially in a bear market. And so this is where Ethereum and the Ethereum chains come in, because they have yields, right? They have staking. They have a mechanism to give back or just further increase the treasury of these companies through the staking yield. And that's what we're starting to see, the move into DeFi. And when we're talking about DeFi, it's the Ethereums of the world, the Polygons of the world, the Arbitrums of the world, all of the Ethereum adjacent and Ethereum connected chains as well. So Polygon Labs just launched Katana blockchain with a focus on DeFi. And notice the timing of this. They could have released this last month, last year, 2 years ago. They did it now as the rotation is occurring. Polygon Labs and crypto trading firm GSR launched a new Ethereum-based blockchain with a focus on DeFi. Dubbed Katana, it's designed to address two of the most pressing issues in the sector, according to Polygon Labs and GSR, which is unsustainable yield fueled by token inflation and the siloing of digital assets across dozens of blockchains and hundreds of applications. Tokens have been spread thin across a myriad of platforms, creating relatively inefficient markets despite crypto's multi-trillion-dollar global valuation. Every chain is built on the opposite of what you would want for deep liquidity, according to the CEO of Polygon Labs. He said you literally have 30 dexes on one chain. But this solution comes with a catch. Unlike highly competitive ecosystems of most general purpose blockchains, Katana will prioritize select financial application. It will also offer several incentives for users to deposit their crypto in those applications. In doing so, it revives an initiative that caused an uproar among users of Polygon last year. Yeah, it's basically it. Katana lured more than $200 million in deposits prior to its debut, which is pretty amazing. Yeah, I mean, we have Katana built by Polygon and GSR, and it's utilizing Ethereum. We also know that Polygon is moving faster now, right, with the approval of some proposals. So the first milestone to Gigagas, I don't know what the hell that is. Polygon's proof of stake goes faster and supports 1,000 transactions per second. So let's understand a little bit more about this, because transaction throughput is going to be a big conversation. So the too long didn't read is 1,000 transactions per second is live and marking a 50% throughput increase that enables money-to-money transfers faster, maintaining industry low fees and fewer spikes through gas optimization, support for Ethereum improvement proposals for account abstraction, better user and developer experiences. The first milestone in Polygon's renewed roadmap for payments and real-world assets is going Gigagas. Gigagas, I don't know what the hell that means. Under 5 seconds finality coming by mid-July in the next major upgrade, decreasing block times and setting the stage for 5,000 transactions per second in Q3. This is part of the Bilai hard fork, and this is going to smooth out gas fees and extend support for account abstraction. The first milestone on the Gigagas roadmap is 1,000 transactions per 100,000 transactions per second, allowing money to move even faster. Now, are they going to actually be able to achieve this? I don't know. I mean, we just been talking about Internet Computer Protocol, which is now the fastest blockchain on the planet, followed only second by Solana. Most of the other chains are only in the double-digit transactions per second, very, very slow transaction throughput. Now, when we see Polygon claiming they have 1,000 transactions per second, we have to keep this in context, because if you look at the data explorers, we're not seeing that, right? So this is potentially hypothetical transaction throughput, not actual used transaction throughput. But they probably would need this because they are a layer 2. So the hard fork raises the gas limit from 30 to 45 million, allowing the network to support over 1,000 transactions per second. Combined with prior improvements that build on parallelized block execution, Polygon continues to innovate the main chain to index hard on creating the best payment and real-world asset rails in the industry. The change to the base fee denominator lowers the gas even more, still fractions of 1 penny, while smoothing price volatility during congestion. And so as you see, like, Ethereum's upgrades and Polygon's upgrades happen in tandem. And the narrative cycle seems to be very, very similar. And so this is something that we have to keep a very close eye on, Polygon and Ethereum. Now, at the Robinhood conference, which we just came out of, we're going to be talking about Robinhood in just a few minutes. They had Vitalik Buterin there in this very odd setup where people are sitting around tables eating, and they had 3 people on stage with an ocean in the background sitting next to a pool. And people were eating while they were it was very odd. But anyway, Vitalik Buterin explained at that conference what comes next for Ethereum in 2025. And then we're going to talk about what actually occurred with Robinhood and what kind of technologies Robinhood is going to be using. And we also have some other news stories as well with Algorand, Circle, stable coins, internet computer, and much more in just a few minutes. So make sure you guys are subscribed, by the way. Also give this video a free thumbs up. That way you never miss a new video, and you let me know you guys enjoy these kind of videos. The thumbs up do help, and they let me know that you guys do support the channel. Let's listen in to what Vitalik says for the rest of 2025.
What is the one thing that you really want to get done well on Ethereum in the next 12 to 24 months?
For me, the one big thing that I hope that Ethereum can really do well on the application side is have a user experience that has like good openness and security properties, but at the same time is like very possible for anyone to use, right? So the thing that we don't want, I think, is like we don't want, the Ethereum nerd ecosystem that nobody understands how to use, and then separately the Ethereum grandma ecosystem where like you're safe but you have no rights and you're kind of locked in, right? And like really, like actually, like blending those in and making sure that users, like have access to both at the same time, have access to the ability to, like take more control over their account if they want to, but at the same time make it very easy for anyone in any position to get set up with an Ethereum account and participate in all kinds of applications. Like really nailing down getting both. And I mean, if we do that, then like I would be very happy.
Okay, so if anybody can explain exactly what he said, let me know. But earlier in the year, Vitalik posted on X personal focuses for 2025, Ethereum, particularly layer 1 long-term roadmap, which I think that this is somewhat what he was just talking about. Full stack security, open source, and privacy, ensuring Ethereum is usable in a way that is highly secure, free of centralized intermediaries, and privacy friendly, including higher up the stack with apps and wallets. He also talked about big picture. Communication tools, info and social layer mechanism design. Examples is governance, public goods versus open source funding, cryptography, operating systems, hardware, physical infrastructure, biodefense. Meanwhile, in areas that are important and where he is relatively less involved, is these people and others are taking on practicals of short-term scaling, peer-to-peer, block construction, and other research areas, Ethereum Foundation matters, and proven app layer categories. I mean, really, this is high-level stuff that a lot of normal, everyday people don't need to understand fully. You guys just have to really understand that Ethereum is the home of DeFi, right? All of DeFi lives within Ethereum, or it's connected directly into Ethereum. Other ecosystems do have DeFi ecosystems and usage, but it's nowhere near where Ethereum is. I mean, not even close. Solana swears they have great ecosystem, but as we saw twice now this cycle, they started with the Hawk Tua coin, like that's what they were known for, celebrity coins that were all rug pulls, and then meme coins again, right? So twice this cycle we've had meme coins in Solana and no actual usage, no actual implementations, no high level like collaborations besides companies or former employees of Solana development going and buying, public companies and then saying they're going to buy Solana on it, right? But there's no usage. Like nobody is really using Solana, and we know this for a fact. And the way that we know this is because during the meme coin fiasco at the end of last year into early 2025, once the fiasco ended, Solana revenues for the validators on the network dropped by 97% in 1 month. So imagine as a validator, you start making $100 and now you're only making $3. Number one, that showed that there was really no other usage. And number two, that the usage couldn't even surpass the meme coin nonsense for a Hawk Tua coin. It's unbelievable. And people are like, no, Cryptoviser, Solana is better than internet computer. Solana is better than Ethereum. It's like, what? They had the Hawk Tua coin on it. That's it. That's it for this cycle. The billionaires did a very, very poor job after FTX collapsed. They had a great opportunity. And by the way, the market, if these billionaires bought at $8 when FTX collapsed, and they actually spent money on developing the ecosystem and then cashed out at $250 all-time record high that just occurred, within the last year, they would have a really nice return, and the price would have probably continued to go up because they were creating actual, DeFi ecosystems and interoperability bridges and things for payment rails for banks and corporations. But they didn't do any of that. They wanted the Hawk Tuah coin. That's what they wanted. And so I don't get it. I don't get it. I mean, if you look at the DeFi data, Polygon is way better than Solana, Ethereum way better than Solana. I mean, even Coinbase, which doesn't even have a coin, is better than Solana from a usage perspective and a high level integration perspective. Who the hell wants to integrate with the Hawk Tuah coin? Not a single person. Anyway, so I think you guys kind of get the point on that. But meanwhile, we're now hearing Robinhood moving heavily into crypto and blockchain. So at their recent conference in France, they unveiled a suite of new products that mark a major step forward for crypto, from expanding Robinhood to over 400 million people, to launching stock and ETFs. They're building the future where investing is simpler, smarter, and more accessible. And this is very interesting, some of the things that they're doing. So they've launched US stock and ETF tokens in the European Union, giving eligible customers exposure to US equities with Robinhood stock tokens. These are basically tokenized versions of the stock. I would imagine eventually this is going to come to the United States. It's just a matter of, all the bureaucracy and red tape and regulatory agencies. And this agency needs to check with this agency, needs to check with this agency. It's going to take multiple years. It's really frustrating how long everything takes. And everywhere else around the world, they just have access. The products are built in the US for US usage, and they launch in the US the last. So effectively, they're creating their own layer two, and they're utilizing Arbitrum. So this user, Steven, who's co-founder of Off-Chain Labs, he said Robinhood is going all in on crypto, and it's powered by Arbitrum. The news is a massive moment for Arbitrum, a massive moment for Ethereum, and a massive moment for crypto. Here is why it matters. And by the way, we're gonna do a deep dive into the Arbitrum price, because if you actually look at the Arbitrum price, a lot of people are going to say, "Holy Cryptoviser, the price has come down so substantially." But it came down for a reason, and we're going to be going through some of those reasons in just a minute here. But before we go there, let's continue with this tweet thread. So he continues saying today's launch isn't the launch with Robinhood tokenization. It's not about Robinhood adding support for crypto, the asset. That's old news. Agreed, right? Just listing coins, this is old news. We're going to watch this video as well in a second. It's about Robinhood choosing Arbitrum and using crypto, the technology, to support and grow its core business. This is back-end integration. This is what we're talking about. When we're talking about Solana adding a Hawk Tuah coin, this creates no actual value to the ecosystem of Solana. It creates value to the people who are launching the coin. But other than that, it doesn't do anything. These are pump and dumps. So it's temporary usage. This is why we saw a 97% reduction in the fees or revenue for the validators of Solana in just 1 month, because all that fiasco of pump and dumps collapsed, right? I mean, you guys have to, I think most of the people watching my video understand this, but there's a lot of people in crypto that they're like, "Oh my God, Cryptoviser, we have to get this Hawk Tuah coin. We have to get this other coin because it's going to change the world." It's like, wait, you really believe that's going to change the world? PP coin is going to change the world. Dogecoin hasn't changed the world yet. Anyway, so last week on CNBC, Vlad laid this out quite elegantly. Let's listen to what he said. And by the way, this is the CEO of Robinhood.
Crypto itself, there's two ways to look at it. One is a tradable asset like options, futures, and equities. The other is as a fundamental underlying technology.
Right.
And in the second lens, it's the next stage in evolution. We've gone from, paper and pencil, filing cabinet-based financial services to mainframe to on-premise, and then more recently cloud. Now, crypto is the next stage in that. So I think in the future, crypto technology will power trading and all sorts of financial services, including trading in stocks and other TradFi assets. So the two will fully merge. And I think Robinhood will play a big role in that.
And clearly now they are. And so what he's saying is accurate, right? for the remember what we've been talking about recently on this channel, and if you haven't been watching, I would highly recommend giving this video a free thumbs up and also hitting the subscribe button. That way you never miss a new video, because we cover all of these things. If you're just watching one video, you're going to be one of those people that comment, but Cryptoviser, how come the price is different on the screen from when I'm watching it? It's like, well, this video was recorded before you were watching it. Very low IQ, right? But most of the people who watch my videos, they have high IQ. They understand. They have to watch multiple videos, understand the thesis of what's going on, not FOMO, understand where the money is moving. And if you understand that there's value versus valuation, right? The value of the coin may not reflect the valuation of the coin. For instance, a lot of people believe that Bitcoin should be at least $20 trillion market cap, right? And so the value of Bitcoin to them is higher than the valuation. This is why now a lot of Wall Street is looking no longer at just the market cap. They are looking at the fundamental technologies of these cryptos. And so, you know, a company like Robinhood choosing Arbitrum, the number 47 crypto, with only about a $1.5 billion market cap. A lot of people would say, well, why didn't they choose Solana? Why didn't they choose SWI? They didn't choose it for the same reasons that these coins should not be in the top 20 or top 50, because they're in the top 20 or top 50 because of their market cap, not because of the underlying technology or capabilities. Big difference, right? The billionaires, they want you to think that SWI is, oh, wow, I got to get into SWI because all the billionaires are investing in it. Wrong. The billionaires invested long time ago at pre-ICO prices, probably at like a penny or less. You bought at $2.50. No. And by the way, who did you buy it from? You bought it from the billionaire. These are pump and dumps. This is the premise of what Solana was built on in the previous cycle. A lot of people were not around in the previous cycle, and even more people who were around in the previous cycle, they just forget. Right? They get so caught up in the FOMO, in the moment. They're like, oh my God, Cryptoviser, Haktua coin. We got to get on Haktua coin. It's like, that's going to be a pump and dump. Cryptoviser, you're just fudding. You're just fudding. You must have no bags. You don't know what you're talking about. And then boom, they rug pull. And then you never hear from these people again, right? Because then they're moving on to the next big thing. Let me get the PP coin. Let me get the Doge coin, right? This is complete and utter ridiculousness. Can you make money on these coins? Of course you can. Can you lose money on these coins? More likely. And that's why on this channel, we talk about the fundamentals of these coins, the fundamentals of these projects, the fundamentals of what the roadmaps look like, right? Because you have Vitalik here telling you guys what he wants for 2025. Boom, we see a post of what he wants in 2025. We see the rollout of these technologies and capabilities with TradFi, right? We know banks are testing on Ethereum. Meanwhile, we have other cryptos out here that say, Cryptoviser, we're going to be the best AI crypto in the entire world. And it's like they don't even have one bridge to Ethereum. They have no major use cases. They have no DeFi. And more importantly, they have no liquidity from stable coins. But their ecosystem truly believes, Cryptoviser, we're going to be the #1 coin in the world. We have the best technology, and it's based on just a puff of air. It's not based on any fundamentals. And so those people are going to lose, right? You have to kind of just ignore them because they don't want to win, right? It's the same thing like you tell somebody about Bitcoin at $10,000, and now at $100,000, they're calling Cryptoviser, should I buy now? And it's like, did you know about it at 10,000? Yes. Okay, well, why didn't you buy at 10,000? Oh, because I didn't think it was going to go up. It's like, well, now it went up 10x, and you want to buy now? You want to buy high? Like, they just don't get it. And they're like, yeah, but Cryptoviser, it's never going to go back down. That's what I'm seeing on Facebook. Everybody's saying that the Bitcoin's never going to go down. I'm like, well, that should tell you it is going to go down, right? Anyway, that's the big difference between people who understand the market and people who don't understand the market. And that's what I try to like relay on this channel every single day. I get a lot of hate for it. It's crazy. But you know, just because my thesis doesn't align with your thesis, it doesn't mean you're wrong, and it doesn't mean I'm wrong, right? We could both be correct and we could both be wrong at the same exact time. And so that's important to keep in mind as well. Moving right along, the coolest part about Robinhood and Arbitrum is Robinhood is using Web3 technology to deliver a Web2 user experience. European Union users will get the same trading experience that Robinhood US users know and love inside the Robinhood app. The European experience will be fully built on crypto rails, but users may not even realize. Again, back-end integration. He says Arbitrum is the natural choice for support to support the scale of Robinhood. Arbitrum has long been the forefront of innovation. I wouldn't say that. Delivering the fastest block times around and best-in-class developer tooling like Stylus. Crypto's mainstream moment has arrived and Arbitrum is ready. I would agree with that Arbitrum is ready. I don't know that they've been at the forefront of innovation, but we will continue. Arbitrum is unique as it, and by the way, this person works at Off-Chain Labs, which contributes to Arbitrum, so a little bit biased, right? Arbitrum is unique as it's both a top blockchain as well as a top blockchain stack and can be customized for any application. For Robinhood, this means deployment of Arbitrum 1 and expanding to their own Arbitrum or Orbit chain. Arbitrum is for everyone. Arbitrum is everywhere. Now, listen, I'm not disagreeing with what he's saying. I'm actually very happy for the Arbitrum ecosystem because I've been following Arbitrum since Arbitrum launched. And it just launched a few years ago. I mean, look, 2023 is when CoinMarketCap started tracking the price. So it's only been around for a very short period of time. But these coins, especially when they first launch, when they have these massive drawdowns in the price, and we're going to talk about that in a second here, there is the potential for these announcements to really pump it up, especially if Robinhood is not the only one, which I would imagine it's probably not the only one that is exploring Arbitrum, because if Robinhood is exploring Arbitrum, that means their consultants are probably also talking to other companies that are looking crypto and saying, well, Robinhood just chose Arbitrum. Let's see how it works out and all of this, right? So the value of Arbitrum may not actually match the valuation. And so if we look at the price of Arbitrum, right now it's about 32 cents. Now, if you look at the price chart, you're going to say, wait, Cryptoviser, it was at $2.30 at the high just a few years ago, and now we've come down substantially, which is true. But I want you guys to also understand that there is an emission schedule or an inflation rate with Arbitrum. We covered this in previous videos, more as kind of like a sidebar conversation. In today's video, we're going to go a little bit more in depth. Because if you guys can see here, total Arbitrum is 10 billion, but currently there's only about 5 billion in circulation, which is about 50%. So the fully diluted market cap of this coin is basically double what the market cap is. You can see right here, $3.2 billion, which is still fairly low. But over the last few years, there's been an inflation rate with Arbitrum. I think it was actually at the beginning of this year. Let's go to token unlocks and we should be able to see it. I believe at the beginning of this year, there was an unlock of like 2 billion coins or something like that. You can see right here, yeah. In March of 2021, it looks like the total unlocked circulating supply was 2.74 billion Arbitrum. Okay, so about a year and a half ago. Now we are sitting at basically 6 billion, 6. Oh, this is uncirculated. I want to look at circulated. Sorry, I'm giving you guys the wrong info. Anyway, you can see the unlock percent was 16% a year and a half ago, and now it's 66%. So basically the supply, the unlocked circulating supply went from 1.6 billion to 6.6 billion. So that means it basically 5x or 6x'd. So the supply increased by 5 or 600%. Think about that. What does that do to the price? It should bring it down by the same amount inversely. So 500%, it should bring the price down like, I don't know, 70%, something like that. I mean, a large number, large percentage decrease. And that's exactly what happened. You could see the price of Arbitrum has just come down, right, after this little pump here. And so a lot of this has to do with the unlocks that have occurred. And I knew when we saw the unlocks, well, let's look at the past. You can see the actual unlocks. Yeah, every single day they're unlocking 500,000 Arbitrum. Now, if we pull this back, if it's doing it every day, we're probably gonna have to go a lot. Yeah, you can see right here, June 15th, it unlocked 90 million Arbitrum, just under 1% of the entire supply. Let's see where else. May 15th, so it looks like the 15th of every month, they release 93 million coins. This is very important to understand, especially with the SWI coin, new coins in general, because these newer coins, they unlock at such very, very large rates that it dilutes everybody else's coins. And a lot of people, especially newbies, don't realize the inflation rate of these coins. I mean, every single day they're releasing about $156,000 at current prices into the ecosystem. Who gets these allocations? The Dow Treasury. So maybe it's going to the Treasury. That's probably a good thing. But you can see the 15th of every month, the investors and the team get unlocks, 93 million coins every single 15th of the month. But I believe it was, that's why I keep going back. I believe it was March of last year, of 2024, that we saw that huge unlock of like 2 billion coins or something like that. And that, I would imagine, had a big effect on the price. Yeah, right here, March of 2024, 1.1 billion Arbitrum were unlocked, right? $361 million. That's basically 20% of what the supply was. And it increased by 20%. So that's something to keep in mind of why the price has come down, because that means that the value of the company was probably around the same, or I should say the value of the blockchain was around the same, maybe declining because it didn't get as much usage or adoption as many of the other coins that have been around for a while. But a lot of the price coming down, I think, is because of this dilution and this constant dilution. But now if you have a big player like Robinhood tokenizing on Arbitrum, all these stock trades, this could be thousands, hundreds of thousands, or even millions of trades. Now, granted, EU is a much smaller market, but they're probably rolling this out, waiting for US to approve the tokenization of stocks as well. And if that happens, and Robinhood uses Arbitrum in the US for trading on their platform, that could create potentially millions of transactions. A week, a day, a month, I don't know. And this could increase the usage of the network, increase the fees on the network, increase the revenue on the network, increase the value of the network. And eventually, you would hope that the valuation, right, the market cap, matches the value. And this is what a lot of these projects and also companies are trying to do in a bull market. They're trying to take advantage, like MicroStrategy. The price of their stock is almost double the underlying MNAV, right? The multiples of their net asset value. It's at 1.8 MNAV right now, right? So 1.8 times what their underlying Bitcoin holdings are is where their market cap is. And so they know that. And so they're trying to capitalize on this. And they're going to continue to buy Bitcoin by selling shares on the open market while there's this premium. That's called it's basically arbing, right? Arbitraging the market. And so utilizing Arbitrum for arbitrage, trading, I mean, they go hand in hand, right? So I wouldn't say that I'm bearish on Arbitrum. I'm definitely not bearish. I'm bearish because of the token unlocks and the fact that we still have half of the supply that's going to be released. But if Arbitrum is able to secure more and more usage, this potentially won't matter because the usage will offset the inflation, potentially. During bull markets, we get a lot of promises from a lot of these companies. And by the way, this is just the EU market right now for Robinhood. So if they come into the US, maybe they're not going to use Arbitrum, maybe they are, maybe they're not going to come into the US. So we have to think about all these things from an investor perspective. The market cap is low enough that it potentially is worth that risk. But the inflation aspect is what I get nervous about. Because whenever they're just continuing to put coins in the market, if the market pumps, there's the very high likelihood it's going to dump, right, until that inflation stops. But then you look at coins like Polygon, right? And you guys know, I believe that Polygon is the premier layer 2 built on Ethereum. I still think Ethereum is probably a better investment from a safe perspective. But if you're looking for potential multiples, yeah, obviously Polygon is there. But Polygon, look at the chart. It's almost identical to Arbitrum, right? And it has had significant pressure to the downside, even though Polygon is fully released. Like there's no more coins that are going to be released. They're fully unlocked. So that doesn't, like the actual supply may not matter as much. And I don't think that people who invest in these coins really look at the tokenomics as close as they should. especially in a bull market. In a bear market, I think that's the only thing people look at, the tokenomics and the value versus valuation. But in a bull market or a non-bear market, I don't even think people are paying attention to that. Because again, like Solana, SWI, I mean, look at the SWI unlocks. It is absolutely absurd, right? That anybody would even want to invest in this coin, right? The total supply is 10 billion coins, and they only have 3.4 billion unlocked, right? And so where do you think the unlocks are going to go? Straight to the investors. By the way, we don't even know who these investors fully are, to let you know. But yeah, you could see basically end of every month, 56 million SWI are released into the ecosystem. And this goes to early contributors, Series B, staking subsidies, which are probably all the same people. They're getting $152 million in unlocks every single month. Every single month. So even if you divide that by day, 153 million divided by 30 days, it's $5.1 million a day in potential sell pressure. And that's upcoming. If you look at the past, it was even more. As of April, it was 88 million SWI, 80 million SWI, 80 million SWI, 80 million SWI. A lot of coins. And so we have to keep that in mind because the bull market will fool the traders, right? The traders won't see. They'll say, oh my God, our SWI is going up so much. Got to buy, got to buy, got to buy. But as you're buying, more coins are being released, more coins are being sold. You're buying the coins that are being sold. Who are they being sold by? The billionaires. So it is a wealth extraction from you to them because they bought at much lower prices. Potentially at like under a penny or at a penny. I mean, if we go back, you can see that the price of SWI was at about 65 cents, which means that the ICO was probably much, much lower, maybe like a penny or 2 pennies, something like that. So anyway, that is the story with Arbitrum. I'm very happy for the ecosystem. It's definitely a coin that I am paying very close attention to. Maybe already bought, maybe already didn't. I don't know. We'll be talking about that in future videos. Congratulations to Robinhood, by the way. And by the way, like I was saying at the beginning of this video, right? Wall Street is going full Ethereum. Tom Lee, by the way, is now chairman of BitMine, which is the company that is that's basically going to create an Ethereum treasury strategy. And what's interesting about this stock is, I mean, it's going up pretty damn high. So it's called BitMine. Just based on the announcement, you can see right here, unbelievable price movement. We went from about a $4 valuation to over $60, just based on the fact that they're going to become an Ethereum treasury company. I'm not going to get too much into the valuation of this company right now. You guys can clearly see it's a little bit overvalued, but this is bringing a whole new cohort into Ethereum because Tom Lee is typically on CNBC versus Bloomberg. And I think the CNBC versus Bloomberg demographic is very different. And so you're going to be bringing a whole demographic into the Ethereum ecosystem, which is pretty big in my view. And I think this is going to benefit all of Ethereum's ecosystem, all the layer 2s, all the Ethereum adjacent chains, etc. This is going to be Arbitrum, Polygon, and more. And I think that people are maybe discounting this fact. As I've been explaining literally for weeks now, Bitcoin has no support at these levels. Bitfinex agrees with me. Bitfinex believes that the vertical acceleration is off the table for now. This doesn't mean Bitcoin's not going higher. It doesn't mean it's going lower forever. It's just a rotation in the markets. And the rotation is going to go into DeFi, Ethereum layer 2s. This is the narrative that is ongoing right now. And if you can't see it, you're going to lose here. And by the way, DeFi Bitcoin or Bitcoin DeFi is also really big. You can see Internet Computer, the CK, which is Chain Key or Chain Fusion. It's the bridge between between Bitcoin or Ethereum and Internet Computer. The Chain Fusion or Chain Key Bitcoin supply continues increasing to higher highs on Internet Computer. Currently, based on this tweet, it's probably actually a little bit different. Let's just go there. Internet Computer dashboard. You can go to dashboard.internetcomputer.org. It'll bring you right to the dashboard. And then just click on Chain Fusion overview, and then right here, chain key Bitcoin. And this shows you the amount of Bitcoin that's actually in the interoperability protocol for call chain fusion. And you can see it continues to go higher. 318 Bitcoin are currently locked in, which is higher than this tweet. So 318 Bitcoin times $105,000, that's about $33 million bridged from internet computer into Bitcoin. Now, some people will say this is very low amount, and compared to the rest of the DeFi ecosystem, yes, it is not an amazingly large amount. But I want you to remember, there's only a few chains that can actually connect to Bitcoin. And are actually running DeFi on Bitcoin right now. There's other ecosystems that are promising they're going to be the premier spot for Bitcoin DeFi. They're not even there yet. They're not even bridged. Look at the activity on internet computer. It is pretty big. And so just because the narrative is switching to DeFi from Bitcoin doesn't mean that you can't still make money. Doesn't mean that Bitcoin is not going to still be used. I actually think that protocols that are doing this, not talking about doing it like internet computer, that are already bridged to Bitcoin and can deploy DeFi on Bitcoin or from Bitcoin, I think that they're going to do fairly well also. And then you have Circle, another key to this cycle. And I've told my viewers for literally years, if your favorite chain does not have USDC, it's effectively over for them. Effectively over. This video I just posted a few months ago, USDC locked out Cardano, no Cardano USDC, Solana will test, ICP needs USDC. I've talked about that for internet computer as well. But really, there's a lot of ecosystems that have no connectivity to Circle. And why is that going to be important? Well. Circle is now applying for a national trust charter, AKA becoming a bank. That is what a trust charter is. Circle has formally submitted an application to the Office of the Comptroller of the Currency, the OCC, this is the banking regulator in the US, to establish a national trust bank. If approved, this would be authorized to operate as a federally regulated trust institution subject to the oversight of that regulator and would oversee the management of the USDC reserve on behalf of Circle's US issuer. An approval would also further strengthen the infrastructure that supports the issuance and circulation of USDC and would offer digital asset custody services to institutional customers. Well. Once again, Cryptoviser was correct. USDC is the key to DeFi. It's the key to the merging of TradFi and DeFi. And Circle also announced the Circle Gateway, a new developer service that enables a unified USDC balance for instant cross-chain liquidity. Effectively, it shows you all your balances on all of the different chains. And I haven't gone too much into all of the details of what this looks like, but I would imagine you'll be able to move your USDC from Ethereum chain to the Arbitrum chain to the Polygon chain to the Base chain instantly from one unified area called Circle Gateway. With Circle Gateway, users deposit USDC into non-custodial smart contracts to create a unified balance that can be accessed in real time across the supported chains. No more manually bridging or relying on third-party liquidity. So effectively, you're not going to lose money by moving coins from chain to chain anymore. You're just going to be able to do it because Circle is going to be able to unify this all, right? This is why DeFi is important. This is why your ecosystem needs to be able to connect to other ecosystems, because if it can't, you lose out instantly. Algorand is also jumping on this, basically stating Algorand Foundation announces the launch of a new wormhole native token transfers, enabling multi-chain interoperability for Algorand. Integration of Wormhole's NTT standard, led by the Folks Finance team, unlocks seamless cross-chain token transfers and set the stage for Algorand's next phase of multi-chain growth. The milestone future-proofs Algorand's DeFi. This milestone future-proofs Algorand's DeFi ecosystem. Builders now have a trusted way to launch multi-chain tokens that preserve the native user experience and performance of Algorand. Well, guys. Pretty much everything that we've been talking about on this channel is proving to be very accurate, right? These are just predictions. I'm not right about every single prediction or every single crypto ecosystem, and I don't have to be right about every single one. Neither do you, because one of the things is having a diversified portfolio. So if one asset is not doing that well and another asset is doing extremely well, you're still winning. This idea that we're not going to enter a bear market. This idea that the market's just going to go up forever. This idea that there's going to be no collapses or bankruptcies or major issues with Bitcoin treasury companies, with exchanges, with integrations with companies, using this technology. This is absurd to think that there's people who really believe that none of this is possible. But this gives us indicators, right? They are the indicators. The same way that when I am saying Bitcoin is going down and people are saying, no, Cryptoviser, we're the most bullish we've ever been. They are the counterparty. You want to buy the Bitcoin at 105,000? Go do it. But guess who you're going to be selling? Guess who you're going to be buying it from? People like me that believe the market is going down. The market is going to correct. But it doesn't mean that we're not going to make money. It just means that we're not going to make money in the asset that has been performing exceptionally well for the last 2 years. We're going to rotate that into Ethereum. We're going to rotate that into XRP, into Solana, into Sui, into Arbitrum, into Polygon, into Avalanche, into whatever crypto you desire, right? But there's people who are going to be the counterparty to that, no matter what. They're going to say, crypto, there is no way Bitcoin is going down. No way. Okay, so you keep buying. You keep buying and stay in your bubble, how MicroStrategy is the best possible investment in the world, which it's not. That you shouldn't short MicroStrategy, which you basically should. I mean, MicroStrategy is shorting themselves by selling their own shares on the open market. So they're the counterparty, right? They don't understand how the market works. And so we do, and we're going to just keep with our strategy and our thesis in these markets. I don't know who's on the other end of the trade, but in the comments of these videos, you can clearly see who's on the other end of the trade. If they're the most bullish at $105,000 when we've been sitting here and there's been billions and billions and billions and billions of dollars entering the market, and the major exchanges that have been around longer than many of us have even understood what crypto is, they're telling you that the data is showing the market is weak. The Bitcoin market is weak. And so if you can take that and you say, okay, if the Bitcoin market's weak, is the rest of crypto weak as well? Is the stock market weak? Is Robinhood weak? Is MicroStrategy weak? You look for what is weak and you say, I'm not going to invest in those. And if the whole market is just weak, right? We have a global, like think about the beginning of the pandemic. Every market went down. Nobody knew when it was going to go back up. But as it went down, people waited. They said, you know what? Let's wait until we see assets where the value is now lower or higher, I should say, than the valuation. And then you buy in. But when it's the opposite way, when the valuation, the market cap is higher than what the actual company or crypto delivers in value, it's a short. It's clearly a short. I'm not saying short the market, but I'm not saying long the market either. And so this is where you have to make your own decisions in your own portfolio. Is this the time to rotate out of Bitcoin? And if it is, where do I rotate? And by the way, by the time you're watching this video, it's probably too late, right? I mean, it's never too late, but it may be too late. We may be at 90,000. We may be at 80,000. Granted, we could also be at 150,000. But the upside risk is far greater based on everything that we just talked about than the downside risk. Meaning the price is going to fall. We have had no support above $108,000. We may get it, but what is going to cause that when Wall Street is already putting in billions and billions and billions of dollars? Well, I don't know, but I do think there's going to be a corrective phase and also a rotation from Bitcoin to Ethereum, from MicroStrategy to other things, maybe Robinhood, maybe Bitcoin mining companies, maybe AI companies, but there will be a rotation because the value doesn't disappear, it just moves. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. Also hit the subscribe button. Check out my other videos on the channel, and I'll see you when I see you. Invest responsibly, and as always, crypto on.